What's happening, ElectroDrive news fam? Get ready to buckle up because the news cycle is moving at warp speed, and we've got the hottest updates that you absolutely cannot afford to miss. The pace is relentless, the innovation is off the charts, and today we're diving deep into the stories that are shaping the future. From record-breaking numbers to strategic power plays and market analyses, we've got it all. You think you know what's next? Think again. We're bringing you the insights that matter, the trends that are defining tomorrow, and the moves that could shake up the entire landscape. So, lean in, stay focused, and prepare to be informed because this is ElectroDrive news, and we're about to drop some serious knowledge. First up, a company is reportedly smashing its own delivery records, signaling a massive surge in demand across its brands. We're talking about numbers that could redefine success in the industry. Then, we'll explore a fascinating strategic alliance being forged, potentially unlocking new avenues for growth and collaboration. Next, we're diving into a critical question for investors. Is now the time to buy into a major player in the market, or is caution the word? We'll break down the expert opinions and market indicators. And finally, we'll analyze the intriguing stock movements of a key industry player, dissecting the patterns that suggest a potential shift in market sentiment. Stick around because this is going to be good. Don't forget to smash that like button, subscribe, and ring that notification bell so you never miss an update. Record-breaking deliveries on the horizon. Get ready for some monumental news, as one of the industry's leading companies is poised to shatter its own delivery records. Deutsche Bank's latest analysis indicates that the Nio Group is on track to achieve an unprecedented 32,000 vehicle deliveries in August, a figure that would mark the highest monthly sales in its impressive 11-year history. This projected tally represents a substantial leap, with expectations of a 52% increase from July and a remarkable 59% rise compared to the same period last year. It's a surge that significantly surpasses their previous record of 31,138 units recorded in December 2024, a time before the full impact of their third brand, Firefly, was felt in the sales figures. The breakdown of these anticipated August deliveries is particularly telling. Deutsche Bank estimates that Nio's core premium brand will contribute 11,000 units. The burgeoning Anhui sub-brand is expected to deliver a massive 17,000 units, and the new Firefly brand is projected to add 4,000 units. To put this into perspective, July saw total group deliveries of 21,017 vehicles, with the Nio mark selling 12,675, Anhui selling 5,976, and Firefly contributing 2,366 units. The recent launch of Anhui's flagship L90 SUV on July 30 first appears to be a significant catalyst, with early data suggesting it alone is on track to exceed 10,000 units for August, accounting for roughly a third of the group's total sales. Despite this incredible ramp-up, Nio's core premium brand has faced challenges in regaining momentum, with July sales showing a year-on-year decrease of 38.2% and a monthly dip of 13.1%, even after a May refresh of its best-selling models. However, the company's leadership remains optimistic, with CEO William Li previously targeting around 25,000 monthly sales for both Nio and Anhui brands in the final quarter, excluding Firefly. Dealer feedback cited by Deutsche Bank points to robust underlying demand, with August new order flow estimated to surge by an astonishing 120% month-on-month to 57,000 units, split between Nio, Anhui, and Firefly orders. Adding to the positive outlook, Nio recently commenced pre-sales for its third-generation EASE 8 large SUV, set for an official launch at Nio Day in late September. In response to this strong demand, particularly for the updated EASE 8, Deutsche Bank has already raised its price target for Nio's Hong Kong-listed shares, underscoring the market's growing confidence. Stay tuned, as we'll soon be dissecting the strategic moves Nio Capital is making to bolster its market position. Hold on tight, because the market is buzzing with activity, and we're about to shift gears to explore some fascinating strategic alliances. Next up, we're diving into a critical question for investors. Is now the time to buy into a major player in the market, or is caution the word? we'll break down the expert opinions and market indicators. Strategic alliance in Anhui, Nio Capital forges new partnership. In a significant move to deepen its roots and expand its operational capabilities, Nio Capital, the influential investment arm co-founded by Nio CEO William Li, has officially established a new business management consulting partnership. This strategic venture is based in Anhui Province and is being undertaken in collaboration with investors closely linked to the local government. This development underscores Nio's ongoing commitment to strengthening its ties with Anhui, a province that plays a pivotal role in the company's manufacturing infrastructure, hosting 2 of its key factories, with a third on the horizon. The newly formed entity, registered on June 22, according to China's corporate platform Tianyangcha, is named Anhui Waihuian Business Management Consulting Partnership. It boasts a registered capital of 20.105 million yuan, which converts to approximately $2.8 million. The executive partner of this new venture is Hefei Nio Industrial Investment Center Partnership, Limited Partnership, an entity directly under the umbrella of Nio Capital. This partnership was jointly funded with the Hefei Jianhui Strategic Emerging Equity Investment Fund, an organization that has strong affiliations with the Anhui municipal government. The scope of their registered business activities is comprehensive, covering enterprise management and investment operations utilizing the firm's own capital, as initially reported by the local news outlet Sina. This collaboration builds upon a history of significant financial support from Anhui. Nearly a year ago, in September 2024, Nio announced a substantial capital injection of 13.3 billion yuan, $1.9 billion, into its Chinese subsidiary, Nio China. This crucial funding comprised 10 billion yuan from the parent company and an additional 3.3 billion yuan from a consortium of strategic investors, which notably included the Hefei Jianheng New Energy Automobile Investment Fund and the Anhui Provincial Emerging Industry Investment. This transaction effectively reduced the parent company's stake in Nio China from 92.1% to 88.3%. Furthermore, Anhui's provincial funds provided a critical $1 billion lifeline back in 2020 when Nio was navigating a period of liquidity challenges. Beyond this provincial collaboration, Nio Capital has been actively expanding its investment portfolio within the technology supply chain. Just last week, it was reported that Nio Capital invested in Xingxin Hangtu Technology, a promising startup specializing in the design of automotive chips. Since its inception in 2016, Nio Capital has successfully raised 5 funds, 3 denominated in US dollars and 2 in Chinese yuan, accumulating approximately 15 billion yuan in assets under management. Its diverse portfolio includes significant stakes in major battery manufacturers like CATL and CALB, the US-based suspension technology innovator ClearMotion, which is a key supplier for Nio's premium ET9 sedan, and various component suppliers for the recently launched Anhui L90 SUV, Nio's foray into the mass market segment. This strategic partnership in Anhui, coupled with Nio Capital's broader investment activities, highlights a concerted effort to fortify Nio's ecosystem and secure its long-term growth trajectory. Prepare yourself, because we're about to delve into the critical financial pulse of the market and assess whether now is the right moment for investors to consider a major stake in Nio. Don't go anywhere. We're about to shift our focus to the investor's perspective and analyze a crucial question facing the market. And finally, we'll analyze the intriguing stock movements of a key industry player, dissecting the patterns that suggest a potential shift in market sentiment. Is Nio stock a buy before September 2nd? As the calendar inches closer to September 2nd, a critical question looms for investors eyeing the electric vehicle sector. Should one consider buying Nio stock right now? This query comes at a time when Nio has been actively launching a series of innovative vehicles, signaling a dynamic period for the company. However, the decision to invest is rarely straightforward, and expert analysis suggests a nuanced approach is necessary. The Motley Fool's Stock Advisor analyst team, known for identifying high-growth potential stocks, has recently compiled a list of the top 10 stocks poised for significant returns, and notably, Nio did not make this exclusive selection. This omission, while potentially concerning for some investors, serves as a valuable data point in assessing Nio's current market standing relative to other opportunities. To provide context, the Motley Fool highlights the immense value generated by its past recommendations, citing Netflix's inclusion in December 2004, where an initial $1,000 investment would have yielded an astonishing $659,823. Similarly, NVIDIA's inclusion in April 2005, with the same initial investment, would have resulted in $1,113,120. These examples underscore the significant long-term gains achievable through their curated stock lists, with their stock advisor service boasting an average return of 1,068%, vastly outperforming the S&P 500's 185% return over the same period. Therefore, the decision regarding Nio stock hinges not just on its individual performance, but also on its comparative value proposition against other market leaders, identified by such advisory services. Investors must weigh Nio's recent product launches and strategic partnerships against its current market valuation and the recommendations of seasoned financial analysts. The timing of any investment is crucial, and understanding whether Nio is currently priced attractively relative to its growth potential and competitive landscape is paramount. The advice from the Motley Fool suggests that while Nio is an active player, other opportunities may currently offer a more compelling risk-reward profile according to their specific investment criteria. Ultimately, the decision to buy Nio stock before September 2nd requires a thorough analysis of its financials, market position, competitive environment, and expert market sentiment, acknowledging that not all promising companies are selected for every top-tier investment list. Stay with us as we analyze the latest stock movements and what they might signal for the future of the electric vehicle market. We're not done yet. Get ready for a deep dive into the technicals that could be driving significant market shifts. And finally, we'll analyze the intriguing stock movements of a key industry player, dissecting the patterns that suggest a potential shift in market sentiment. Nio stock, analyzing the surge and consolidation. Nio stock is currently trading at $6.41, maintaining a steady position following a period of impressive gains. This stability comes after the Chinese electric vehicle maker broke out of a prolonged consolidation phase, and current technical patterns suggest that further upside potential remains as the stock consolidates within a bullish channel. The recent price action has seen Nio shares fluctuate between $6.26 and $6.54, exhibiting controlled movement that often precedes more significant market shifts. What's particularly noteworthy is the stock's ability to hold its ground after a recent surge, rather than experiencing a typical pullback. This resilience is interpreted by technical analysts as a strong indicator of sustained institutional interest, even as some retail traders might be taking profits. The sentiment among experienced traders remains decidedly optimistic, with many viewing the current consolidation as a healthy pause rather than a sign of a trend reversal. This bullish outlook is further supported by the stock's technical foundation. The 50-day moving average is firmly established at $5.03, and the 200-day moving average sits at $5.93, providing robust support levels. These averages are significant as they often represent price points where institutional buyers have historically entered the market, creating a stable floor for the stock. Looking ahead, the path appears favorable for Nio's bulls. If the stock can maintain its position above the critical $6.20 zone, technical analysts are projecting a potential move towards the $6.80 range. This represents a potential gain of 6–12% from current levels, which, while seemingly modest, signifies substantial upside in percentage terms. However, as with any investment, risks are present. A breach below the crucial $5.93 support level could trigger a downward movement, potentially pushing the stock towards the $5.03 mark. while a deeper correction testing the $4.29 area is considered unlikely by most analysts. Given the current technical setup and the improving fundamentals within the broader EV sector, it remains a possibility in a worst-case scenario. The current stability and the bullish channel suggest that NIO might be in a calm before the next big rally, with a strong potential for continued upward momentum if key technical levels are maintained. And that wraps up our deep dive into the market dynamics affecting NIO. That's all the news we have for you today, but the conversation doesn't stop here. Make sure to hit that like button, subscribe to the channel, and ring the notification bell so you're always the first to know. Nio is set to smash delivery records with analysts predicting over 32,000 units for August. Nio Capital is strengthening ties with Anhui by forming a new business consulting partnership. Investors are weighing whether Nio stock is a buy, with mixed signals from market analysts. NIO stock shows resilience and bullish technicals, suggesting potential for further gains after a recent surge. That's all the top stories for today on ElectroDrive News. Don't forget to like this video, subscribe to the channel, hit that notification bell, leave a comment with your thoughts, and follow us on all our social media channels to stay connected. We'll see you in the next one.